Narrator, serious, curiosity-driven tone. When a nation's currency collapses, who really wins? You might assume it's the ordinary citizen who suffers. The truth? Most people do, but hidden in the chaos, a select few are quietly stacking their fortunes. Today, we uncover the mystery behind currency collapses and the shocking forces that profit while billions lose everything. Cut to historical visuals, old coins, stock markets, footage of Weimar Germany and Zimbabwe. Narrator. To understand this, we have to travel back in time to the early 1920s, post-World War I Germany. Hyperinflation was ripping through the Weimar Republic. People were burning wheelbarrows full of banknotes just to buy bread, their savings wiped out overnight. Yet, while ordinary Germans lost everything, international traders, certain banks, and a few insiders made unimaginable profits. How and why does it keep happening? Origins: the seed of collapse. Visuals: stacks of money, government buildings, central banks. Narrator. Currency collapses rarely happen by accident. They begin with debt, mountains of it. Governments borrow to fund wars, bailouts, or social programs. They print money to pay off debts. At first, it seems harmless, almost invisible. But like a snowball rolling downhill, inflation starts to accelerate. In 1923, Germany, reparations from the Treaty of Versailles, forced the government to print marks endlessly. In Zimbabwe, excessive printing to cover budget deficits led to a $1 trillion knot. And today, the pattern is eerily similar. Modern economies are drowning in debt, and central banks continue to inject unprecedented amounts of money. Rise. The warning signs, visuals, stock tickers, rising prices, people reacting. Narrator. The rise to collapse is gradual, marked by inflation that seems manageable. At first, businesses raise prices, wages lag, the media reports temporary spikes that never truly resolve. Investors start to hedge. Some see the early signs moving assets into gold, foreign currency, or cryptocurrencies. These are the first whispers of who might profit when the inevitable crash arrives. History shows a predictable pattern. Those with access to inside information, foreign accounts, or speculative financial instruments position themselves months or even years before the collapse becomes visible. Breaking point: the moment of crisis, visuals, stock market panic, riots, bank closures. Narrator. Then comes the breaking point. Hyperinflation hits, savings evaporate, and confidence in the currency collapses completely. Citizens scramble for basics. Governments impose price controls. Banks limit withdrawals. Chaos reigns. But for certain hedge funds, commodity traders, and insiders in global finance, this is a goldmine. Assets bought cheaply before the collapse suddenly skyrocket in value. Foreign investors who converted early reap huge gains, and currency speculators, some even betting against their own nations, profit from every panic-induced move. Fallout: who loses, who wins. Visuals: destroyed cities, people in despair, luxury offices. Narrator. The fallout is devastating. Ordinary citizens lose homes, pensions, and life savings. Businesses fail. Social unrest grows. Governments scramble with emergency measures. But look closer. International banks, large corporations, and hedge funds have not only survived, they've grown richer. Take the Argentine crisis of 2001. Millions were impoverished overnight. But multinational corporations and foreign investors, having anticipated the collapse, secured assets at fractions of their value. The pattern repeats. Always the same groups at the top, always the same scapegoats at the bottom. Failed fixes. Why the cycle repeats. Visuals, stimulus packages, policy announcements, graphs showing debt growth. Narrator. After the collapse, governments attempt fixes, currency redenominations, interest rate hikes, austerity measures. Often these stabilize the economy temporarily, but rarely address the root cause: debt, overprinting, and systemic inequality. And so, the cycle continues, repeating the same winners and losers in every corner of the globe. Today, with staggering global debt exceeding 300 trillion and central banks holding trillions in unbacked assets, modern economies are walking the same tightrope. The question isn't if, but when the next major collapse will occur, and who will quietly profit from it. Modern parallels and shocking data. Visuals, modern stock exchanges, Bitcoin charts, real estate. Narrator. Consider this. In 2023 alone, certain hedge funds betting on currency instability earned billions, while emerging market citizens watched their savings shrink by 40–50% in local terms. Cryptocurrencies, gold, and real estate became escape routes, tools for the wealthy to protect themselves while the majority lost out. Patterns repeat, and history offers a stark warning. Those who understand the system can always find a way to profit. Takeaways, narrator, calm, reflective tone. So what can we learn from centuries of currency collapses? Currency collapse is predictable. Watch debt, printing rates, and government policies. The majority of people lose. The wealthy and informed insiders profit. Diversification in assets, gold, foreign currency, real estate, is the only realistic defense. The ultimate warning, financial systems may appear stable, but history proves they are fragile. Understanding who benefits and why is the first step towards safeguarding your future. Closing visuals, calm but suspenseful music, world map highlighting financial hubs. Narrator. If you found this eye-opening, hit the like button, subscribe for more financial mysteries unraveled, and turn on notifications. Because the next currency crisis could be closer than you think. End of screen with links to related videos, why hyperinflation happens, how hedge funds make billions in crises. Word count, 770 words. Structure follows: hook, origins, rise, breaking point, fallout, failed fixes, modern parallels, takeaways, warning, call to action.